This week, a potential bombshell of a plan to redo the way you buy hurricane insurance. Bring it home, make it affordable, make it reliable when you need it the most. It's one of South Florida's biggest issues. Lawmakers know it. Recent reforms have not yet made premiums more affordable, though they say give it time that some may not have. This week, two lawmakers made public a plan that changes almost everything about the windstorm insurance market here. At the same time, we're trying something new here. We want to hear from you in real time about what you think. Emails and posts, you can do it right to the lawmakers right here during this conversation at twisf@wplg.com via email, or you can post to us on Twitter, X at WPLG Local 10. You can do that right now as you're listening. Right here, right now, State Representative Spencer Roach, Republican from Florida's Southwest Coast, right here at the table. And via Zoom today, State Rep Hillary Cassel, Democrat from Dania Beach, who joins us today from Tallahassee. And welcome to you both. It is so great to have the both of you together. Watched your workshop this week, was kind of blown away by the idea, a lot of devil in the details to get to. And thanks for being here on a Sunday. Especially, I want to thank Spencer Roach, who drove 2 hours from Fort Myers to be right here at the table with us. So Spencer Roach, first to you. The first question is kind of explain to us what is basically this plan. Give us the broadcast version to start us off.
Yeah, so first of all, let me say, well worth the drive, because this is the most important issue that we are hearing from Floridians about every day. And let me explain the plan. So this is a big, bold, transformative, and I want to stress bipartisan idea to totally transform Florida's property insurance system. And it does that by isolating the risk of hurricane coverage and putting that squarely onto Citizens. So Citizens would be a vehicle now of first resort that would offer universal wind coverage to every Floridian who wanted it. They would still pay a premium. It would not be free. And in those storm-free years or decades, the amount in there would continue to accrue, and you would have a surplus of potentially billions of dollars to pay these claims when the big storms hit. So,
as opposed to the insurance companies.
Right. And what we're seeing now the objectives are simple. There are two objectives here. We want Florida homeowners to have affordable premiums, and we want them to have the confidence to know that when they incur a loss, there's going to be a coverage and an indemnification for their loss. And what's happening here in Florida is we know now that simply having an insurance policy doesn't mean that you have insurance, because we see these fly-by-night, undercapitalized insurance companies move into the state, rake in high premiums, and then siphon them off, and then there's no money left, there's no collateral reserves left to pay out claims. And when the big storm hits, these insurance companies fold their tent, they leave the state of Florida, and they leave taxpayers on the hook to pay these claims.
So I want to bring, we could do first names here, right? Spencer,
Absolutely.
Hillary, Gleno, we're good. Okay, so Hillary, you were here, you've been here as the state, as lawmakers have been making these reforms during the past couple of years. And so these reforms all were supposed to be a year and a half, 2 years away, focused on the independent private market and giving them space and time to do good business here, come back to the market, be competitive. This totally turns that on its head.
Glenna, it has to. The reality is the companies that we've invited into the state of Florida are exactly the type of companies that we invited in 2006. And as my partner mentioned, these are companies that have no historical data. They've never operated in other states. They are undercapitalized. They're relying heavily on a reinsurance market, which you and I both know that's one of the highest parts of what people pay in their premiums. The cost of reinsurance is anywhere between 40 and 50% of what we're paying in the reinsurance market. So all we're doing is insanity. We are creating the same problem that we created in 2006. And in 20 years, if we don't do something drastic, we're going to be in the same position that we're in today, with companies that go insolvent and leave Floridians to carry those assessments that we see through FIGA on our shoulders. And it's time for us to do something different.
So right now, the Citizens is the insurer of last resort. What you're saying is Citizens is going to be the insurer of first resort, and no independent private market companies will have windstorm coverage in Florida.
Well, yes, let me explain that. So Citizens would be the insurer of first resort for windstorm only, and that's all Citizens would do. All of the other miscellaneous bread and butter coverages that your homeowner's policy includes would be left to the free market. So the free market companies could come back in, They could know their risk. That's what these companies want. They need to be able to actuarially calculate their risk. They would make a killing. So this bill is very capitalistic in that it only takes that area of risk that is virtually unknowable, uninsurable, out of the private market and makes Citizens the backstop. But people, Florida citizens, Florida residents would still have the option if they wanted to purchase private market insurance. I doubt anyone would do that. It would be prohibitively expensive and is when they have an option to use Citizens. So yes, they would still be able to purchase a private plane if they wanted to.
You know, something that I forget which one of you had said this in the workshop, that there were 12 hurricane-free years in this state. And you would think that the companies who were writing windstorm would have used those 12 years to really rack up some savings so that when the big storm hit after 12 years. But Hillary, I think it was you in the workshop that said the storm hit and all of a sudden they said they didn't have enough money to pay out. How is that possible?
And that's why this plan that Spencer and I have put together is so transformative, because you have citizens who, while we call them the insurer of last resort, historically, they never have been. They cover our most vulnerable properties, our riskiest properties, and that falls on the shoulders of Floridians. So when you look at the plan that we are proposing here, it's really to just call citizens what they are, and to put Floridians in a position where we continue to bank those premiums, and we're not worrying about that money going to pay off executives, to pay shareholders, to pay taxes. Those are three huge ticket items that Citizens doesn't pay as a quasi-government entity, that in those off-hurricane years, we would be able to bank those premiums and be prepared for when that big storm hits. Whereas the plan that we have now is, in those off years, in those good years, we know that Florida has paid its insurance executives some of the highest salaries in the nation, despite being in an insurance crisis.
And also, Citizens cannot go insolvent. That's just not possible. Spencer, you had mentioned, I was watching this workshop and I said, wow, that's pretty novel. It's not novel at all. You said there is a precedent for this.
Well, it's not novel at all. There was a former legislator named Don Crane who served in the Florida House in the early 70s. He was an insurance industry executive. He owned an insurance agency, and he got dropped in 2006 and put together a consortium of industry experts and businessmen to propose a plan like this. But let me just say this. This is not theoretical. Texas has been doing a version of this only in the coast since 1971. We've got 50 years of empirical data from Texas, another large state with a coastline, that this works. California has been doing this, but for earthquakes since 1995. So we've got 30 years of empirical data from California. This is not theoretical. It is working in other large states, and we can borrow best practices from states like Texas and California to create a model that works for the state of Florida.
And what those states show, have you been able to, have you done this yet, extrapolate out the numbers, say, from Texas vis-a-vis what that would look like on Florida in the coastal areas?
We have some rough numbers on that. In fact, the report that the Don Crane working group released in 2006 had a lot more detailed numbers than that. And those reports were evaluated by Florida Tax Watch, who said this is a realistic plan. It could work for Florida. And other former executives from Citizens have looked at this and said this is a realistic plan for the state of Florida. But I would argue this: it's inevitable. Eventually and inevitably, Florida is going to have to embrace this model, because what we're doing now is unsustainable. If we had another Hurricane Ian a few months ago, the market would have completely collapsed.
I don't think the public knows that.
Well, I don't think they realize how precariously close the market came to outright collapse. And I would argue that the market has already collapsed, because if you look at the infusion of taxpayer dollars that's kept this market on life support, without those infusions of taxpayer dollars, the market would have already collapsed. So I would argue it has collapsed already.
So in this workshop, the CEO of Citizens had something to say. He was a bit skeptical. You're going to hear from him. We'll talk more with the lawmakers when we come right back. We are back with State Representatives Spencer Roach, Republican from Fort Myers, and State Rep Hillary Cassel, Democrat from Dania Beach. We are talking about a really interesting idea to redo windstorm insurance. First, I want to mention that the CEO of Citizens, Tom Serio, in the workshop we've been talking about, expressed a lot of concerns, and I want to let everybody hear a little bit about what he said.
This is a very different change in direction. It would fundamentally change the mission of Citizens. And although they haven't taken a position, I would say we've been focusing, as the market has recovered, We want to take good care of the policies we have, but we've been focusing on depopulation. And for obvious reasons, this would turn that in a different direction.
Hillary Cassel, he did not sound like he was a great proponent of this plan.
And I don't think he's supposed to be. You know, his mission as the, main executive for Citizens, he's been directed by the legislature to depopulate it. So to present something that changes that, as he says, and really puts them in a different position, I don't think that's where he operates from. He operates from the space of our job as the Citizens executive is to depopulate these policies and allow the private marketplace to carry the rest. But one of the things that we didn't hear him mention is the fact that the private marketplace doesn't necessarily rebound and take those big high risk properties or those most vulnerable properties off Citizens' books. And I think that's what we need to think about. And with our plan, we spread that risk statewide. Right now, the way that it works is Citizens, we allow these companies to come in. They cherry pick the best properties so they have the least amount of risk while we still carry all the risk. So if we're going to carry all the risk, let's spread that out across the state. And that way and bank those premiums and not worrying about paying out executives and be ready for that big storm when it hits.
So one of the things that he had talked about, that Spencer Roach, was saying that the premium rates would have to double to be actuarially sound. Does that sound right to you?
Well, look, I think that Citizens should be charging actuarially sound rates, but here's the essence of what the CEO of Citizens is missing. He's looking at the market right now as it is instead of what it would be under this plan. So you would essentially be bringing in anywhere from 8 to 10 million more homeowners into the insurance risk pool. That's how insurance works. It would reduce premiums for everyone else. And then it would ensure everyone has windstorm coverage. But also, he's not looking at the greatly reduced reinsurance that would no longer be necessary under this plan. And I'll tell you this, we have some data. If this plan, if Hillary and I's plan had been the law 10 years ago, we would have about 82 billion, that's billion with a B, in collateral reserves to pay out claims. And the problem with what's happening with the private insurance market now is that the premiums, the profits are getting siphoned off to either executive pay or they're getting transferred to another corporate entity, some kind of management company that's impossible to claw back. Under this plan, no one would be making a profit, right? These reserves, these premiums in the non-storm years would continue to grow and grow and grow. And look, when the big storms come, if we're going to bail out anyone, I'd rather bail out Florida homeowners and taxpayers than bail out insurance companies like we've been doing for the last 70 years.
So one of the other things, Hillary, that Tom Serio had brought up is assessments, because right now Floridians with any kind of insurance are open to any kind of assessments if need be. His point was assessments might increase exponentially.
That's a lot of hypothetical there, right? The reality is Citizens has issued one assessment since its inception. And as Spencer just mentioned, at the end of the day, we're always concerned about assessments. We get assessed in the event that Citizens doesn't have the capital to pay out the claims. But more importantly, we currently get assessed when the private insurance companies don't. All of us right now are under a 1% assessment because a private insurance company went under after they paid all their executives. And I think with our plan, at the end of the day, in the worst case scenario, that event happens. First and foremost, we also know the legislature would be able to step in and help with any assessments in the event that we are still as financially sound as we are here in this state by moving some money from the general revenue. But as Spencer mentioned, I would rather know that an assessment that I'm paying across all lines by all policyholders across state, we know that that wouldn't likely be a very large assessment on an individual basis. And I would rather know my money's going to bail out my neighbor than bail out an insurance company executive.
Have you all gotten any response from your colleagues? Your colleagues who are working pretty hard on reforming this somehow? Well,
we have, and I think if you were to pull up this bill and look at the sheer number of both Democrat and Republican co-sponsor requests that we've gotten on this bill, we've got a fairly large number of folks on both sides of the aisle that have co-sponsored this and are excited about this idea.
No Senate sponsor yet, though, right?
You know what? We could not find a single senator to actually file the bill in the Florida Senate, but we're going to continue to work through that. I mean, sometimes these ideas take years to get enacted. But again, look, Texas has been doing this for 50 years, California for 30 years. We've seen this idea work in practice in other states. Florida cannot afford to have another big storm like Ian and have the market completely collapse. This is an idea whose time has come.
So next up, we're trying something new today. So we're going to take a quick break, and then we want to take your questions and comments on this new plan to redo hurricane insurance. Still time to get them in. Here are the addresses again. Our email, twisf@wplg.com, or if you like X Twitter, please do at WPLG Local 10, and we will do that when we come right back. We really have been overwhelmed with questions and comments. Thank you all. We're going to get to as many as we can. Spencer Douglas is asking, HOAs, homeowners observe flood and wind do not actually cover damages.
Yeah, look, this is the reason why Florida homeowners are so outraged. You know, it's not just that we're paying high premiums, right? I think most Floridians, no one likes to pay high premiums, but when you're paying high premiums in good faith year after year after year, and then the time comes for you to use the product that you're paying for and you can't use it, that's adding, absolute insult to injury. That is the worst of both worlds. And, in my case in particular, I would have had more money had I never even had insurance and just put those premiums in the bank, because my insurance company folded their tent, went bankrupt, and left the state.
So this covers that.
Yeah, and that's happened for many, many, many Floridians who are left holding the bag, left high and dry, literally and figuratively. But what would happen here is it would work a lot like the National Flood Insurance Program, and because it's a public-private partnership, the incentive to make a profit is not there. These people would get paid out. That would be the first priority of citizens at this point, is to pay out those claims when the loss was incurred, which is not the priority of the private market. It's deny, 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 delay, delay, delay. Yeah. And people get so desperate that they accept pennies on the dollars for their claim.
Interesting questions from Andy. Hillary, if the state isolates windstorm to citizens as a universal carrier, what is to prevent insurance companies from hiking the cost of the rest of the insurance premiums, including auto?
Well, listen, they still have to prove their rights. They still have to prove those rates are reasonable, and they have to get approved by OIR to do business in the state of Florida. So if they still want to do business in the state of Florida and remove the biggest risk that they face, which is insuring for the unknown, that hurricane, then they wouldn't be able to operate in this state. But we know how insurance companies work. They like to make money, and there's still an option available for them to make money, to be profitable, and to actually take care of Floridians with regards to the other types of claims that are offered.
Well, Glenna, let me just add here too. Yeah. Hillary is really onto something when she talks about making money. What would prevent them from doing that? Simply is competition. If our plan were in place, you would have a flood of private market insurers coming back into the state, because they can write generic bread and butter policies like they could in any non-natural disaster state. They would make a killing, and they would never ever have to insure against the unknowable, incalculable risk of a hurricane. The private market would kill it here.
Which is what they're trying to do right now in the first place. Okay, so Dan, viewer Dan, what happens to those of us who live in older homes that cannot be updated easily?
Yeah, and look, that's why our plan works perfectly for you, Dan. At the end of the day, more likely than not, you're already insured by Citizens. So we would just be making sure that those properties that aren't as risky, we spread that risk. Citizens has the ability to insure those properties that aren't on the coastline or aren't in a position to be updated, and you would still have insurance.
Okay, Mark, I'm trying to get in as many of these as we can. I sure do appreciate that our viewers are really on top of things. Mark says, great program. Thank you, Mark. Can the state increase the number of insurance investigators to root out fraudulent insurance claims? That's fraud is one of the things that the current reforms are trying to attack also. A good question.
Look, I think the legislature has really done a good job in this area. I mean, we've gone to great lengths, both with the assignment of benefits and some tort reform proposals the last few years to sort of ferret out these fraudulent claims. I think we've done enough on that with the legislature. That will always be a problem, but I think we've gone to great lengths to try to root that out.
Nelson, this is interesting. Nelson wants to know, why can't we have a program where the windstorm protection is only from June to November, and would that reduce the cost? Which is hurricane season. Hillary?
I think the reality is, when we're looking at that windstorm coverage, it doesn't necessarily just cover those named windstorm events. We had a storm in Tallahassee in January that caused extensive amount of damage, and although not a named wind event, would technically qualify under wind coverage. I also think if you're only insuring for a shortened period of time, obviously you're going to probably have you're going to pay more for a shortened period of time versus spreading it out. So great idea. I love that. What I love about this idea is I think we've been so focused for so long in Tallahassee on there's one problem with one solution, and that was litigation reforms. And what I've been really excited and energized to see, especially with my colleagues, is by putting this big idea out there, it's really got people thinking. So I love the ideas, keep them coming. Spencer and I are definitely open to suggestions and really solving this problem for Floridians.
And you know our audience is going to take you up on that 100%. Hillary Cassel, Spencer Roach, it is so great to have you here. I know you'll both be back. Maybe you'll even drive for us again. and we will keep on top of this and see it through. And this likely won't happen, I should say, this year because there is no Senate sponsor. But this is just fresh into the public, and it'll be really interesting to see where it goes. Thank you both.